let's talk about car insurance rates and in general just car payments and everything to do with that. It greatly affects you being able to buy real estate, but we need to kind of go over a little bit of the warning signs that I am seeing right now when it comes to the entire auto industry. The numbers you're going to hear are staggering. You're going to be shocked, and perhaps you are one of the people in one of these positions. So pay attention. Let's make a plan together and let's get you into home ownership if you're a renter, and it really does start a lot of times with the car. Now, before I get down to the nitty-gritty of all the numbers, let me tell you something from personal experience when it comes to me being a real estate agent and trying to get customers to qualify for a loan. You know, people want to buy a house, right? This is just like the American dream. Well, it used to be. I mean, it's not always the American dream anymore with 7.5% interest rates, but a lot of people come to me and they say, where do we start? So the first thing we have to do is get you approved for a loan. And guess what happens? Guess what I'm seeing out there? I see young couples with car payments for, you know, $1,000 a month, $700 a month. Just crazy. That's just a car payment on one vehicle. And some of the numbers that we're going to be going over is going to show you what the national averages are. And then, of course, I'm going to talk a little bit about Florida and specifically. Florida is, of course, the state that has the highest car insurance rates. So I'm not sure if you noticed on your car insurance bill, but I noticed there were a lot of companies that got approvals to increase rates by 20% or more. Now, did your wages go up 20% or more? Probably not. But car insurance companies are very much data driven, where they decide the rate at which you're going to be paying for your car insurance based on data. That's it, right? And of course, they have like a spread in there where they make some money, but it's very much based on actual costs of repairing cars and totaled cars and what percentage of them and your age. Even your credit score falls into that calculation. And real quick, let me tell you about my insurance. In November 2023, for a 6-month policy, my car insurance was over $985. And just now in May, on my 6-month renewal, it went up $1,039 for the 6 months. And I know that's not the highest rates out there. I do shop my policy around all the time, which is a great hit, by the way. If you just do the numbers, you're going to notice that I went up over 5% in this 6-month period, which means that over 1 year, that's over 10%. It's closer to 11% that I went up. Once again, did the wages go up? Over 11%. That's a no. Check it out. I just came out to this boat launch right here. Got a couple docks that come out. Really cool place over here.
I'm at City Island Park in Sarasota, by the way.
This is right by St. Armand Circle, very popular tourist spot. But this little island has Moat Marine Laboratory and one of my favorite burger joints or little food joints, and that would be New Pass Grill. I'll tell you, get that double burger over there, so damn good. So with car insurance rates going up, you know, about 20% in many cases for people, how does that affect your borrowing ability for a home loan? And let me tell you, it really affects you, because lenders use the debt to income ratio. All they do is they check how much are the payments of your monthly obligations. So your minimum credit card payment is a monthly obligation, your car payment is a monthly obligation, and your car insurance is a monthly obligation, and your existing mortgage or maybe your rent, you know, and they take everything into account, and then they can calculate how much can you afford to buy in terms of a home. Now the calculation is a little deeper than that, so if you want to talk to a lender, down below I do have a link to my guy Chris Cavazos. His phone number is listed directly in the description here, so you can just call his cell phone direct. But now, if you are thinking about buying a home, you want to have the lowest car insurance. So step one is shop it around, right? But really, what's step -1? What's the step before shopping it around? And that has to do with car payments. So, you know, obviously, if you're going to get an expensive vehicle, you're going to have high car insurance. Why? Very simple, because the dollar amount to replace the vehicle in case of a total loss is going to be higher if you have an expensive car, okay, or an expensive truck. So you want to start by having a very affordable car and very low payment, if any at all, because once again, if you have a car payment, you're going to be affected by the debt to income ratio, and you want to keep the car payment as low as possible, not just the insurance payment, because the cheaper the car you have, the lower probability of having a car payment, right? And if you have a car payment, once again, it's the same thing. It's going to be affecting your debt to income ratio. So you're going to be able to buy less of a house if you end up having an expensive payment. So this next stat here has to do with average monthly car payments that people have. This is staggering. You're going to be shocked. Well, maybe not. Maybe you won't be shocked. But I was shocked, I'll tell you that much, because my car payment is $406 a month and I drive a Lexus. But the average car payment in the US is $738 a month for new vehicles, and for used vehicles is $532. So mine was a used vehicle, so I have, a lower payment. Plus, I'm like a bargain shopper. I shopped vehicles for probably 6 months before I decided to buy something. I needed to sell my car. I needed to get out of the car that I had. It's starting to have a lot of trouble, and I just decided, hey, it's time to finally get a vehicle that I have payments on. And I mentioned in the previous video, I hadn't had payments since I was 21 years old. I'm 45 now. So that many years, I decided to keep my debt to income ratio low so that I can qualify to buy properties. And that's exactly what I've been doing. And it's definitely the get rich slow game. So are you interested in playing the get rich slow game or get rich quick game? If you're doing the quick, well, good luck. I don't know of any get rich quick scheme that actually works. But the get rich slow game is real estate. So you have to keep your debt to income ratio low. But if you're going to have this average car payment of $738 a month on a new vehicle, what are you doing? Just forget about buying a house. Hopefully you bought a house first and then you qualified for the car payment. But even if you do that, you're kind of stuck and you're not going to really be able to buy the next house and qualify with a debt to income ratio being hit with a $738 payment. Now, these are averages, right? But once you have that $738 payment, how much is your car insurance? Holy crap. And listen, Florida is the state with the highest car insurance out of every single state. The average is $233 a month. And for the entire United States, the average is $136 a month. So there are definitely some states that have much, much cheaper car insurance than Florida. But being that this is Florida Real Estate TV, we need to be talking about this particular state and how you're going to be affected if you try to buy a property and first you go for the car. It is a big mistake. I'm doing my best to teach my kids who are 17 and 19 that what they need is not a nice fancy vehicle, but most teenagers want that. But what they need is something that pays them. So that is not a car. A car does not pay them, right? You usually pay for a car. So you can really help yourself, okay? Here's how. First of all, you're gonna have a lot less stress if you have a low car payment, okay? Now, if you do have a low car payment because your car isn't very expensive, well then you're gonna save a lot of money on car insurance. Double win for one action. And then the next thing is you're going to be able to qualify for a better property. Maybe you'll qualify for a duplex or a triplex. You're going to qualify for more loan, right? And that's because your debt to income ratio is going to be much lower if you don't keep your payments high. So what do you want to do? Are you trying to get rich or are you trying to look rich? Because with a $738 payment for a new vehicle, I guarantee you, you're not getting rich. You're looking rich. I tell people to ask this themselves all the time. Do you want to look rich and just like feel good in the moment all the time because you're driving a nice fancy car and have a nice all the perks and all the bells and whistles, or do you want to get rich? And getting rich means you keep your payments low and you do extreme budgeting. Listen, you really need to do extreme budgeting. If you want to start buying duplexes and triplex, at least in Florida, give me a call, reach out to me, because there are some parts of Florida that have, $200,000 duplexes. And then there's other parts of Florida that have $1.2 million duplexes, right? It all depends where you're shopping and what exactly you're shopping for. But one thing that is unnecessary is having really, really high car payments. I know that for sure. And let me give you one last little tidbit of what you can do to get a free car. Now this is a little crazy. I know that this is a little extreme as well, so bear with me, okay? But if you want to get a vehicle and you want to get a free car, let's just say you want to get a free $5,000 car in 2 years, okay? Do the math with me. You basically need $2,500 per year being generated somehow for free, okay? So let's say $2,500, and then we're going to divide it by an annual rate. So I'm going to divide it by, a savings account gives you 5%. So divided by 0.05, that's $50,000. If you put $50,000 into a high yield savings account, then you're going to get $2,500. So ask yourself this: do you have maybe $10,000? Do you have maybe $20,000? Do you have any money in a savings account that's just not doing anything, or maybe in a CD that's paying you some diddly squat rate, or it's locked up or something like that? Instead of trying to save up that $5,000, you could try to get it for free. And this is like something that Robert Kiyosaki teaches. And he is, a guru of finance and real estate investing and so on. I really do like Robert Kiyosaki and everything that he teaches in his books. So he wrote Rich Dad, Poor Dad. If you haven't read that book, please go read that book. It is an amazing book, great way to get started into real estate and really seeing it from the point of view of an investor. So anyway, he says, if you want something for free, if you want to buy something, instead of spending money on something and basically buying a liability, which means something that doesn't pay you, then just go and save or invest money into something that yields you a return, and get that return to be high enough to buy the item that you want. He gives an example of his wife in the book, and this is a book from a long time ago, but she wanted, I think it was a Porsche or something like that. She wanted, a sports car, a fancy vehicle, and she ended up just investing money. It wasn't a 5% high yield savings account, but they invested money into some sort of investment that basically yielded such a return that she was able to get the car for free. And that was a very expensive car. The secret to it all is summarized in one word, and that would be discipline. Without discipline, you probably can't achieve any of this.